Welcome back, everyone. This is Andrew Nelson from G&A Financial Advisors, and today we're sitting down with a special guest, Jamie Keech from the Resource Insider. He's a millennial venture capital financier in the mining space, and he's raised millions of dollars for junior mining stocks over the past few years. Today we're going to get his insights on the markets, how he's positioning his subscribers, and how he's currently managing his own portfolio. Jamie, thanks for making the time to be here.
My pleasure. I'm mostly just stuck at home drinking coffee and talking on webcams, so this fits quite nicely into my schedule.
You could get into it. What are you doing at the Resource Insider? Why did you start it? And you could give kind of the 30-second elevator pitch on the company.
So Resource Insider is what we call a deal flow service. So it's a bit different than a traditional newsletter. What we do is, well, first and foremost, we only take accredited investors as our members. And I should start by saying that. So our product is designed specifically for accredited investors. And that's someone that makes typically, and it depends where you live, but typically over $200,000 a year, or they have $1 million in assets that excludes their primary residence. And this is a way, I guess, that the government considers these people to be either financially sophisticated or have some money to risk and potentially lose in higher risk investments. And there's a lot of debate about the merits of that or the truth to that, but the reality is that's what it is. So we only take accredited investors. What we do now is we look for what I consider to be the best and the highest potential deals in the mining, natural resources, and energy sectors. And what that means, and the way we pursue and invest in these deals is typically through private placements or PIPEs, private placements into public equities. And for those people who are not familiar with private placements or PIPEs, this is different than buying stock on the market. You know, when you're buying stock on the TSX or the New York Stock Exchange or what have you, you are trading stock. You're buying it from another investor. When a PIPE happens or when a private placement happens, you are investing directly into the company. So your cash is going into that company. It is hopefully being, it's designed to be catalytic capital. So it's there for that company to do something new. And that can be any number of things. In the case of a lot of mining companies, that could be exploration programs, that could be developing or building a mine, that could be acquiring another project. Any number of things that they need to raise money to do. So we're looking to get in to companies that have a plan to do something new and they need money, they're raising money to do it. And we do that through PIPEs. The reason we do that is because coming in at this stage often gives us the opportunity to cut a better deal. Because the companies need this money, what they often do is they provide, I guess, a bit of a sweetener to entice people to come in to a private placement versus buying stock on the market. So they might offer their shares at a discounted price. So if it's trading at $1 in the market, you might be able to buy it at 75 cents in a private placement. Or they offer things such as warrants. And a warrant is essentially an option to buy more stock in the future at a lower price. So these warrants really sweeten the deal. They give you an upside if things go well. And of course, getting in at a discount sweetens the deal as well. So that's the focus of us. We are primarily focused on exploration companies and mining companies. We've participated in pre-public companies, pre-IPO companies that are still private, or we've participated, or I should say also we've participated in publicly listed companies that are raising money for something new. And that's it, Nelson.
So you mentioned something there that, I'd like to get some more kind of insight on. You mentioned you're looking for the best and highest quality deals in the mining and energy space. What do you look for in a deal, and what makes a good deal?
That's a good question, and I can answer that. It's a long process. Our due diligence. When we do participate in a deal, it's typically after at least many weeks of due diligence and sometimes several months of due diligence. And that means meeting with management teams, often flying to the site and checking out the technical merits on site and a host of other things. But I think we can divide it, what we look for, into three main categories. There's three things we want to see. The first is the project needs to be technically sound. It needs to be good. Me being a mining engineer, that's been a lot of my background of looking at mining projects or exploration projects and evaluating them. I worked for Equinox Gold and its predecessors companies for 3 years, primarily working in corporate development, anyone who's familiar with that story knows we went from about a $20 million market cap to about $1 billion market cap in the time that I worked there. And most of that was through M&A, through mergers and acquisitions. And my job was to help look at these potential acquisition targets and say, is this something we want to buy or be associated with? So every different kind of mine or project is going to have a different definition of technically sound. So an early stage gold exploration project in Nevada, we're going to look for certain characteristics versus an operating copper mine in Peru or Chile, different characteristics. But we really do go through the work on that and making sure that yes, this is what the company says it is. It is more valuable than it's currently being valued at, and there's an upside there for investors. And that's a long, often painful process, but that's what we get paid for. So that's the first part: a technically sound project or asset. The second part, and I would say equally importantly part is a proven, reliable, trustworthy tier one management team. What do I mean by that? Typically what we want to see is we want to invest in a group of people that are doing something that they have already done before. Mining is a very, very tough business. Anyone that's invested in mining companies knows that it's very easy to lose money. And what a lot of people, I think, don't fully appreciate is it's very, very easy to lose money on good projects if they are run by mediocre management teams. And I would summarize that as something like I always say, which is don't ever underestimate a bad management team's ability to fuck up a great asset. And we say that a lot, but it's really, really true. And what I mean by a great management team is someone that has done something specifically and they are trying to do that thing again. And a good example of that is a gentleman named Mike Allen. He is the CEO of a company that we recently invested in. It's called Eclipse Gold. They are performing gold exploration in Nevada on a massive land package that they bought from another company just outside of Reno. Highly promising. They've had a great run so far. Why I invested in that company, why I really invested in Mike, was because he had done this just a couple years ago with a company called Northern Empire. Northern Empire went in Nevada again. They acquired an asset. They bought it for, I think it was something on the order of $10 million. And a year later, they sold it for $117 million. He went in, he saw the geological potential there. They drilled some holes. They reinterpreted the data. And they made the case that, this is not what people thought it was. It's in fact quite better. It's much bigger. It's more promising. And then they sold it to another mining company. That was his plan coming into this new project, the Hercules project. He saw underappreciated potential there, and he's going to prove that. Now, this is exploration. Nothing is guaranteed, but I'm much, much more comfortable investing in and backing someone that has done this before and knows the process and also the hiccups that can occur than someone who's never done it before. And it's not to say that, new entrepreneurs or new explorers aren't going to succeed, but it's certainly far more likely that people who have succeeded previously will succeed again than someone with no track record will succeed. So that's something we look for: a great proven management team. And again, as I said before, a really promising high potential asset. The third and final thing, and again, this is equally important, is it needs to be a company that has been structured well. This is a phrase that gets thrown around a lot in the mining industry, in the junior mining industry, I should say, and in capital markets in general. And if you're anything like me, like the way I was when I started in this business, a few years ago, I think I really moved from the technical side to the capital market side about 5 years ago. I heard a lot of people say that, and I had no idea what they were talking about. So I normally just nodded and smiled and tried to figure it out on my own. What I have come to understand that is, and I think people should be thinking about this, a well-structured company all comes down to who owns what stock and what price did they get it at. That's what you need to be thinking about. So if a company's been set up, we want to see that management teams are heavily invested and they own a big chunk of stock. Now, what does that mean? And we want them to have got it at a price that is reasonable. So management teams, I should say, first and foremost, should be incentivized for taking risk. They should be able to get their stock at a cheaper price than the average person because they're doing all the work. They're putting their reputations and livelihoods and what have you on the line. But what we don't want to see is for management to have gotten all their stock at a fraction of a cent and then upsold everybody else along the way. We don't want them to be able to have a multi-million-dollar win and not deliver any values to shareholders. So when I talk about a well-structured company, what I really mean is I want to see that the early investors and management of that company can't make a lot of money unless they make later shareholders money as well. So that is what we're really focused on. Something that allows our members and myself, frankly, because I invest in every deal we do, come in with confidence that we are aligned with management and that if things go right, we're going to make money and not just the guys that were in before us. And I don't want me or my members to end up holding the bag for some, fucking scam artist that got in at a fraction of a penny 6 months before me and added no value. So we're looking for a well-structured company led by a great team with an asset that has all the technical aspects to be high potential and to make money. And that's probably a very longer-winded answer than you were looking for, but that's our process.
I think that's a good formula for success. I know a lot of other professional investors use a similar strategy or a like-minded one, and that's something I use myself. That's a good segue into my next question. You mentioned Eclipse Gold there. What are some of the other companies you've invested in? And, investors and viewers are going to be watching this channel and video to hear about stocks that you've participated in and how they've performed. So if you could shed some light on that.
The other companies that we've invested in. So we're a bit of an interesting model. A big chunk of our companies are still private and they're pre-IPO is what we'll call them. And then some are public already. So I can talk a little bit about both and give you an idea of what we're doing. So Eclipse Gold was one of the most recent ones we did. That's something we're extremely happy about. Our members came in at 35 cents and now the stock is trading, I think this morning it was at 75 cents. So this is in frankly a fucking horrible market where the whole world's been hit by this coronavirus and no one knows what's going on. This is a big part of our strategy, coming in to deals at a cheap early price where we can structure around some of the challenges these projects will inevitably face, some of the highs and lows that we can expect out of an exploration company. So, we're really, really happy about obviously coming into that deal and the performance so far of the guys at Eclipse. They've done a great job. Another good example is another company we invested in called Vizsla Resources. So Vizsla has had, is a strong company led by a great team. A friend and colleague of mine, Michael Connert, is the CEO. Andrew, obviously, Michael as well. Michael has been a sort of mining entrepreneur and hustler and go-getter around Vancouver for years. And, he spent a long time putting this together. And why we invested in this company is because I like the story behind silver. I like the scale of the deposit, and there's all sorts of technical reasons for that. And Michael has done a better job of surrounding himself by a really, quite frankly, a phenomenal team than anybody else I know in our generation. He's got Craig Perry as the chairman of the company. Craig is the CEO of ISO Energy. He's a partner at EMR Capital, a giant private equity firm. He's the chairman of Skeena Resources. He's one of the most accomplished and well-respected geologists that I know, or I think that anybody knows. And he's also got a few other guys on there. He's got the COO of Ausenco, the giant engineering firm based out of Australia. It's a great team that is taking a swing at a really promising asset. And, this is a perfect example of what can go right and what can go wrong because, we came in at 40 cents. They rocketed out of the market. I think they went up to 80 or 90 cents very, very quickly. And now given this coronavirus thing, given slowdowns in Mexico and the rest of the world, I think they've fallen down to about 35 cents now. So right now we're underwater a little bit on that one, but this is why backing the team is so important because mining is a cyclical industry and it's a volatile industry, and you can never plan for the things that are going to go wrong, but you can certainly plan that things are going to go wrong. And they have done really a phenomenal job of managing this in terms of putting in health and safety measures in the country, working with local authorities, and they are well financed, and they're going to be able to weather the storm, and I think come out stronger than ever when silver gets its inevitable run. So another good example of a company we've backed. I'll give you one more because we've done over a dozen deals in the last 2 years, but I'll give you one more that's still private. So this is the company, our private company that I'm most excited about right now. It's called Sun Peak Resources. It is an exploration play for a copper gold exploration play in Ethiopia. And that might sound a little out of the box and pretty foreign to a lot of people. But the reason we invested in this deal are primarily twofold. One, it's the team. These are the guys that were largely responsible for the discovery of Bisha, a big mine in Eritrea, which is just next door to Ethiopia. They also found another mine down the road in a company called Sunridge Resources in Eritrea. And now I believe it's about 70 miles away over the border into Ethiopia. And due to various political issues and challenges, Ethiopia had historically been an incredibly underexplored jurisdiction. It had not gotten the love and attention that it deserved, and certainly not that its neighbors in Eritrea got. So that has changed. The country has opened up and has become very exploration friendly and mining friendly. And these are guys that know those rocks intimately. So these are guys that have made 2 discoveries on the what is it? The Arabian Shield. Yep. The Nubian Arabian Shield. Yes, thank you. The Nubian Arabian Shield. So they made 2 discoveries there, and now they're a few miles away over an imaginary man-made border, but in the same geological terrain, and they're just trying to repeat the same success. And I won't get too much into the technical details here. There's lots of other places you can find that, but essentially, they are seeing many of the same geophysical and geochemical indicators that they saw in their 2 previous discoveries. They're drilling now. Things are going phenomenally well. They were going to be going public last month, the end of the month. That got put on hold due to the coronavirus issues and everything, which frankly, I'm a little happy that it got put on hold because it's not been the most forgiving environment on the exchange right now. But they're going to be coming out pretty soon. They're extremely well financed. They raised something like $14 million. They brought, some great groups in. One of them is RCF, Resource Capital Funds, one of the biggest mining private equity firms in the world. They put a big chunk of money into this after going through the technical data. We'd come in around the same time. I've known Greg Davis, the CEO, and his team for years now, and this is exactly what we're looking for. And you guys can hold me to this. I predict they're going to have a huge run when they come out of the gates, and I think our members are going to make a lot of money. I think I'm going to make a lot of money, and hopefully I'm going to be able to gloat about that in the near future. But we'll see. We'll see how it goes.
I hope so too. Yeah. So that takes me to my next question. Unless you're an individual and an investor living under a rock right now, you'd be pretty aware that we're in pretty unprecedented and volatile times. But within the mining space, what are you kind of looking forward to in the next 6 to 12 months? What has you excited?
That's a good question, Andrew. We've basically had to really rejig a lot of our strategy over the last few weeks. Our focus of Resource Insider has been very specific. It is private placements into undervalued companies that need funding, and we've been able to cut that we can get great deals on. And we've done just that over the last 2 years, and we've done a lot of awesome deals that are really cranking it out right now. The world has changed pretty drastically in 3 weeks, and now there are many, 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 many companies that are extremely undervalued, and I don't need to do a private placement in order to invest in them. We've switched our focus in the short to medium term to producers, streaming and royalty companies, and very, very well-financed development stage assets. And I can get into that a little bit, why we're focusing on those. There are companies out there that are making money. Some of them are making money hand over fist, particularly the royalty and streaming companies. And they've seen their share price go down by 20, 30, in some cases up to 50% with no fundamental change in their portfolio and their assets and anything. And in some cases, like they're trading below where they were a year or two ago, and gold is higher. So they're making a lot more money. So we've been positioning ourselves particularly in the short term, the last couple of weeks, I've been buying up royalty companies. They're seeing a bit more of a run lately. We'd held back on buying producing mining companies, and the reason for that is because I think we're going to see more and more and more and more mines shut down around the world, which will be temporarily because, frankly, you can't stop mining things indefinitely. But I do think it will provide a really promising, a really advantageous buying opportunity. I could be wrong. Things could go gangbusters and just ramp up, and I'll never get another good chance to buy them, and I'll miss the bottom. But I don't think so. I think we're going to see another dip, at least in the short term, and I'm going to use that as a buying opportunity for producing miners. Particularly, I'm looking at the gold companies, the well-run gold companies, the Barracks, the Agnico Eagles, the B2 Gold, the Equinox Gold, where I used to work. When I'm seeing dips in them, I'm buying a little bit here and there, or rather I will be buying a little bit here and there in those companies because I think, they're not going anywhere. And if we get the gold environment that I anticipate, and I think that you anticipate too, Andrew, then those companies are going to be worth a lot more money. And finally, developers. I've gone back and forth mentally on developers for the last few weeks. And the reason I like them is because they can weather depending on what stage they're at, but they can weather a shutdown sometimes much easier than a producing mining company. Producing mining company, if they go on care and maintenance, there's still a host of costs associated with that, just keeping the wheels on and keeping everyone safe and keeping, meeting regulatory requirements and monitoring requirements and environmental things and et cetera, et cetera. So they can be quite expensive even to do nothing. And they might be forced to shut down because we're seeing refineries shut down around the world. So, even if they're not internally forced to shut down, if they don't have anyone to refine their gold, they can't just stock up gold indefinitely on site. So that's providing, or doré, I should say, on site. That's providing other challenges. But development stage assets have the ability to kind of put the brakes on, and as long as they're not in the middle of construction, it's pretty easy to sit tight and wait. And not destroy too much value. One of the ones I'm looking at there is Integra Gold, and they're maybe not quite development stage. They're still, they have an asset. They're not building it yet, but they have a big asset. It's known to be there. They're expanding it, and they just did a financing last December, I think it was. So they're loaded up with cash. They don't have to worry about it for the next year, and they've seen their share price. I don't know what they're trading at today, but they were cut in half at one point. So again, that's a company that's not going anywhere. It's a company that's being run by a phenomenal management team. George Salamis is the CEO. George is a friend of mine. He's done this, I don't even know how many times before, most recently Integra Gold, but he's been involved in a lot of sales. So great team, great asset, well-financed, well-structured, not going away anytime soon. Hard to go too wrong on something like that. So to answer your question, I'd be buying primarily royalty companies, followed by soon producing gold miners, and then maybe one or two development assets, just as a bit of a longer shot bet, but ones that I think could have a good return.
So just to follow up on that, say if you had $1 million in cash right now, how would you be structuring your portfolio or allocating your capital between those different segments you mentioned in the mining space?
Yeah, that's a question, and that's a bit of our magic sauce here at Resource Insider. So we do run a paid service where we advise our members on exactly that. So I'm not going to give you too much details, although you can all very happily buy my service at resource-insider.com. But what we are doing is basically what I said. In the short to medium term, we're going to be primarily in royalty and streaming cos with a smattering of the producers, and then a very, very small amount of developers. In terms of exploration, if I see a barn burning great deal, I'll still buy it. And, we actually just did a financing to a company called Oh My Gold Mines, which was exactly that. We came in at a very, very low valuation for a company that has, a very proven management team and a fucking phenomenal asset. So we're excited about that. And if one of those comes across my desk, I'm going to take it very seriously because, our members, we don't take a 6-week time frame. We don't take a 4-month time frame. We're looking 1 to 2 years in the future because I think that's how we get the 10 baggers. So that's where we're really focused, and we have a bit more patience than I think a lot of people, and that has proven to be very successful to date. But right now, it's really hard to go wrong with streaming and royalty companies, and then the gold developers, or rather producers. Sorry.
All right, Jamie. I think we'll leave it at that. I think you've provided a lot of good insights and analysis on the mining space and what you're doing and how you're positioning subscribers at Resource Insider. If people want to find more information on your company, what's the website and where can they find you on social media?
Yeah, the website is just resource-insider.com. On a side note, if you're the guy that owns resourceinsider.com, you need to reach out to me because that website's not being used and I want that goddamn domain name. And, one of the best places to find us is actually YouTube. So if you just search Resource Insider on YouTube, we've got a ton of videos up. We've got podcasts up. We've got interviews with some of the best and most respected people in the space. We just released one today with David Garofalo, the previous CEO of Goldcorp. We've got Warren Irwin, the fund manager there. We've had Nolan Watson, the CEO of Sandstorm, and a lot of great people. You can find me on Twitter. It's just Jamie Keech. And yeah, that's it. I would highly recommend you check out our YouTube channel.
All right, Jamie, thanks so much for the time. I look forward to doing a follow-up conversation in the near future.
Yeah, my pleasure, Nelson. And thanks for having me on. And, I just want to say, I really appreciate the videos you're doing here. I think they're adding a lot of value, especially in terms of the education in the space. You've taken what is a relatively opaque environment and hard to learn things in and made it much more accessible for people. And I wish I'd had something like that when I was 25 and trying to figure out what the hell is going on in the finance side of mining. Because it's not an industry where there's a book you can just read and really understand. You've really got to know the right people and be exposed to the right things, or else it's very hard to learn anything. And I think you're doing a good job to combat that.
Jamie, thank you very much for those kind words. All right, everyone, that was Jamie Keech from the Resource Insider. We heard today an overview on his business and what he looks for in a good deal, and also some of the deals he's recently invested in over the past few months. He's provided his outlook on the markets and what's going to get him excited over the next 6 to 12 months. And if you'd like to know what he's going to be investing in, you're going to have to subscribe for his premium service at resource-insider.com. If you like this video and want to hear more mining videos like this, make sure to hit that subscribe button down in the bottom right-hand corner. Thank you so much for watching and good luck in the markets, everyone.